In the world of global politics, some partnerships feel solid, unbreakable even. But in 2025, the relationship between the United States and India, the world's two biggest democracies, was pushed right to the absolute edge by a trade crisis that came out of nowhere and hit hard. Okay, let's get into it.
It all comes down to this one pretty shocking number, 50%. Just think about that. Imagine half the value of something you sell just gone because of a single decision.
Yeah, that 50% is the massive tariff the U.S. slapped on a huge range of Indian goods. Now, this wasn't some minor disagreement. This was an economic shockwave that threatened to unravel decades of careful work and strategic partnership. So the big question is, how on earth did we get here?
This thing didn't just bubble up over years. No. It was a super fast escalation that honestly caught a lot of people completely off guard. Let's just look at the timeline.
It happened incredibly fast. It kicked off in July 2025. President Trump announces an initial 25% tariff. Okay, tense, but maybe manageable. But then, just a few weeks later, on August 6th, bam, another 25% gets tacked on, and this time, it was explicitly aimed at one specific issue. By the end of that month, August 27th, the full 50% tariff was law. So in just over a month, we went from a strained relationship to a full-on code red crisis.
So a 50% tariff sounds bad, but what does it actually feel like on the ground? To get that, we've got to look at the economic fallout and see who's really paying the price here.
The sheer size of these jumps is just staggering. Take gems and jewelry. We're talking about a $10 billion export industry for India. The tariff went from a tiny 2.1% to over 52%. And textiles, it skyrocketed from around 14% to a totally crippling 61%. These aren't just abstract numbers. This means the absolute backbone of India's export economy was effectively priced out of its single biggest market overnight.
And this is the human cost. 110 million? That's how many people are employed by India's small and medium-sized businesses. These aren't giant multinational corporations. They're the engine of India's exports. We are talking about weavers in one city, diamond polishers in another, whose entire livelihoods were suddenly put on the line. So you have to ask, why? Why do something so drastic? What could possibly justify risking not just billions in trade, but a critical strategic partnership? To understand that, we've got to peel back the layers here. The main trigger was oil, Russian oil. Before the war in Ukraine, Russia accounted for less than 2% of India's oil imports, a tiny fraction. By 2025, that number had exploded to over 35%. Now, India's argument was simple. This is just good economics. We need energy, they're selling it at a discount, so we're buying it. But the U.S. saw it very, very differently.
And the language coming from the U.S. administration was incredibly sharp. The senior trade advisor, Peter Navarro, didn't frame this as a pragmatic choice. He basically accused New Delhi of fueling Russia's war machine. This quote right here, calling it Modi's war, shows you just how personal and charged this whole issue had become.
At its very core, what you're seeing here is a fundamental clash of worldviews. The U.S. position is all about economic nationalism. It demands alignment from its partners. It's you're with us or against us kind of view. India, on the other hand, is all about what it calls strategic autonomy. It's been their policy forever. It means they make decisions based on their national interest and they won't bow to pressure from anyone.
Of course, a trade war between two giants like this never happens in a bubble. The ripples spread far and wide. So let's zoom out and take a look at how this fight is creating big winners and big losers on the global stage.
This tariff immediately created a massive, almost impossible disadvantage for India. Let's say you're an Indian textile exporter. All of a sudden, you're facing a 61% tariff. Meanwhile, your direct competitors, say in Bangladesh, are only paying 20%. And in Pakistan, it's just 19%. How do you even begin to compete with that? It's game over.
So who steps in to fill that void? Well, you've got countries like Bangladesh, Vietnam, and Pakistan who are perfectly positioned to just swoop in and grab all those textile contracts. And in other sectors, it's countries like Turkey and Egypt that stand to gain. Global buyers are already shifting their orders. And the scary part is, once those supply chains move, it's incredibly hard to get them back.
And here, right here, is the ultimate geopolitical irony. One of the main reasons the U.S. and India built this strong partnership in the first place was to act as a democratic counterweight to China. And now, this crisis is driving a wedge right between them, which gives China a golden opportunity to strengthen its own position with both sides. But India isn't just sitting there taking the hits. Not at all. New Delhi has its own playbook, and it's making some pretty bold moves to navigate this crisis.
India's response is basically a three-pronged attack. First, public defiance. They are making it crystal clear they will keep buying Russian oil. It's a direct assertion of that strategic autonomy we talked about. Second, they're trying to protect their own economy, launching relief programs and cutting taxes to help the businesses that are hurting. And third, and this is the really big one for the future, they're hitting the accelerator on trade deals with other partners like the EU. So they're never this vulnerable to the US market again.
All of this leaves the relationship at a major crossroads. I mean, the future of this incredibly important partnership is literally hanging in the balance, with both sides really digging in their heels.
The American view seems to be one of pure confidence. The Commerce Secretary, Howard Lutnick, basically predicted that the economic pain would be so bad that India would have no choice but to come back to the table, quote, saying sorry. The bet from the U.S. side is that economic leverage will win out over everything else.
So, where does this all go? It seems like there are two main paths forward. The first is some kind of negotiated settlement, where both sides give a little, find a face-saving way out, and de-escalate. The other path? A permanently fractured partnership, where the trust is just shattered, and the relationship becomes much more cold and transactional, losing all of its strategic depth.
And why this all matters goes so far beyond just trade numbers. This crisis is a massive stress test for a partnership that was carefully built up over decades. It was supposed to be a cornerstone of stability in the Indo-Pacific, a democratic alliance to balance out rising authoritarianism. That entire grand idea is now seriously at risk.
Which leaves us with a final, really crucial question, doesn't it? In this new world of intense competition between superpowers, is it even possible anymore for a nation to carve out its own path, to maintain its autonomy? Or, when the chips are down, does every country eventually have to pick a side? The answer might be decided by how this very crisis plays out.